Meme coins are some of the most volatile markets in crypto. They move extremely fast. They move emotionally. And they can go from complete obscurity to massive attention in a very short period of time. Because of this, many traders assume meme coins are impossible to analyze. They believe price movement is purely random, pure speculation, pure chaos. But when you actually study these charts carefully, something interesting begins to appear. Meme coins follow the same structural behavior that every financial market follows. They expand, they retrace, and then they decide whether the trend continues. The key difference is that meme coins move faster and deeper than most other assets. And because of that, understanding retracements becomes extremely important. Because the biggest opportunities in meme coin trading rarely come from chasing the initial pump. They come from understanding where the retracement ends. In this episode, we're going to break down Fibonacci retracement levels specifically for meme coin trading. But instead of just talking about theory, we're going to study real examples from DEX screener charts. We'll look at 4 different scenarios: healthy retracements, deep pullbacks, failure zones, recovery setups, and we will combine Fibonacci retracement analysis with the OBV indicator, which helps us understand whether real volume is entering the market. Because Fibonacci tells us where price might react, but volume tells us whether that reaction is real. Before we jump into the examples, we first need to understand why retracements happen. Meme coins usually start with a rapid expansion move. This expansion is driven by attention, social media hype, new liquidity entering the market, and traders rushing to participate in the trend. But no market moves in a straight line forever. Eventually, traders begin taking profits. Early buyers exit positions, late buyers panic, and the market begins pulling back. This is what we call the retracement phase. Retracements are not necessarily bearish. In fact, they are often a healthy part of a trending market. They allow the market to reset. They remove weak hands. They create new entry opportunities. And they allow stronger traders to accumulate positions. Meme coins simply perform these retracements more aggressively, which is why Fibonacci retracement levels become extremely useful tools for analyzing them. Our first example is a token called Life, which we're analyzing on the 15-minute chart. This token gives us a very clear example of a healthy retracement during a meme coin trend. After the initial expansion move in Life, price begins pulling back. This is completely normal behavior. Traders who entered early begin taking profits. New traders hesitate to enter the market, and price begins retracing toward the 0.5 and 0.618 Fibonacci levels. The 0.5 level represents equilibrium. It is the midpoint of the previous move. At this point, the market begins asking an important question. Is the trend still strong enough to continue, or is momentum beginning to weaken? In the Life example, price begins stabilizing around this equilibrium zone. But the real confirmation appears when price approaches the 0.618 golden pocket. At this point, we begin seeing the OBV indicator increase. This is a critical signal. It tells us buyers are stepping back into the market. When price holds support inside the golden pocket and OBV begins rising, it usually indicates accumulation is taking place. In the Life chart, once the golden pocket holds and volume begins increasing, price begins its next expansion phase. This is a textbook example of how a healthy Fibonacci retracement behaves in a meme coin trend. The market pulled back, buyers stepped in, volume confirmed the move, and the next leg upward began. Now let's look at something that happens very frequently in meme coin markets. Deep retracements. Our next example is a token called Triple T, and we are analysing it on the 30-minute time frame. In this scenario, price retraces deeper than the golden pocket. Instead, price moves toward the 0.75 and 0.786 retracement levels. This area is what I refer to as the blue pocket. And in meme coin trading, this zone is extremely important. Meme coins often retrace deeply because traders are highly emotional. When price drops significantly, many traders assume the trend is finished. They panic and exit positions. Stop losses are triggered. Liquidity gets absorbed. And this creates the perfect environment for accumulation. When price enters the blue pocket in the Triple T example, we begin seeing something important happen. The market starts stabilizing. And when we look at the OBV indicator, we begin seeing volume increasing. That tells us buyers are stepping back into the market while price is still deep in the retracement. Once accumulation finishes, price begins expanding again. And this often leads to explosive continuation moves in meme coin markets. Now, we move into what is often the most critical Fibonacci retracement level in meme coin trading, the 0.886 retracement. This level represents what I often call the make or break zone, because by the time price reaches this level, the market has already retraced the majority of the previous move. Nearly the entire expansion has been erased. And this creates a very interesting psychological environment in the market. Traders who bought near the top are now deeply underwater. Early traders who held through the retracement begin losing confidence. And new traders looking at the chart often assume the trend is completely finished. At this stage, sentiment usually shifts from excitement to fear. And this is often where traders make emotional decisions. They exit their positions. They assume the project has failed, or they begin shorting the market expecting further downside. To demonstrate this behavior, we can look at a token called maxing on the 4-hour chart. If we take the Fibonacci retracement from the low of the move to the previous high, we can clearly see price retracing deeper and deeper into the range. Eventually, price reaches the 0.886 retracement level. At this point, most of the previous move has already been erased. And on the chart, it begins to look like the entire trend is finished. In many cases, this is exactly what happens. If price reaches the 0.886 level and cannot reclaim higher levels, the meme coin will often continue falling. The trend breaks down. And price may rotate all the way back to the origin of the move. But sometimes the market does something very different. Instead of continuing lower, price begins reclaiming the level. And when that happens, it creates one of the most powerful setups in meme coin trading. This is known as the 0.886 recovery setup. And once you understand this setup, you will start noticing it appearing frequently across meme coin charts. Let's continue using the maxing example on the 4-hour time frame. As we saw in the previous chapter, price retraces deeply into the 0.886 retracement level. At this stage, many traders assume the coin is finished. They exit their positions. Or they begin opening short positions expecting the trend to collapse. But instead of continuing lower, something important begins to happen. Price suddenly reclaims the 0.886 level, and not only does it break back above the level, it begins holding support on top of it. This behaviour is what we call a reclaim. A reclaim tells us that the market has rejected the breakdown. And what often happens just before this reclaim is something called a liquidity sweep. When price initially drops into the 0.886 region, many traders place their stop losses just below that level because they believe that if the level breaks, the trend must be finished. Very often, the market will briefly push below that level, triggering those stop losses. This creates a burst of liquidity. Once those stop losses are triggered, the selling pressure disappears. And this is where stronger buyers often begin stepping into the market. On the maxing chart, once price reclaims the 0.886 level, the structure begins to shift. What previously looked like a failed trend now begins forming a recovery structure. But price alone is not enough confirmation. This is where we bring in the OBV indicator. When we look at the OBV during this reclaim phase, we begin seeing something important. Volume starts increasing. This tells us that real buyers are stepping back into the market. And when price reclaims a major Fibonacci level while OBV begins rising, that is a strong signal that accumulation may be taking place. This is often the beginning of a new expansion phase. And in memecoin trading, these recovery setups can lead to extremely powerful moves. Because once the market realizes the trend has not failed, traders who exited begin re-entering. Short sellers get squeezed, and momentum begins building again. That is why the 0.886 recovery setup is one of the most powerful reversal signals you can find in memecoin markets. Memecoins may look chaotic on the surface, but when you analyze them using market structure, Fibonacci retracements, and volume behavior, clear patterns begin to appear. Some retracements are healthy, some test conviction, some signal failure, and some create powerful recovery opportunities. Understanding these retracement zones allows traders to stop chasing the pump and start positioning during the reset. Because in memecoin markets, the biggest gains rarely begin at the top. They begin during the retracement. This is Memes to Markets, and I'll see you in the next episode.